Hey, it's Joanne Muse of the Tax Lien Lady, and this is Ask the Tax Lien Lady Live, where you get to ask me your questions about investing in tax liens or tax deeds, and I answer them for you. And if I don't know the answer, I will tell you, and I'll point you in the right direction, or I'll get the answer for you. But there are a lot of questions that I can answer about tax lien or tax deed investing in different states. And for the ones that I don't have the answers for, I know the experts that can answer them for you, and I can point you in the right direction to go. Okay, so when you come on, say hello, let me know what state you're in, and give me your question about investing in tax liens or tax deeds. Now, I'm at a little bit of a disadvantage today because usually Nicole is here to help me, my assistant Nicole, and she is on vacation this week. So I don't have her to look and see on Facebook what questions we have on Facebook that people put into the comments, or on the YouTube channel, because what we do is I do these on StreamYard and I stream them to my Facebook page. And then once they're recorded on Facebook, we also put the replays up on YouTube on our YouTube channel, so that people that aren't on Facebook can actually get their questions answered too. They could put their questions there, but Nicole is not here to give me those questions today. So if you had put your questions in and I don't answer them today on this video, then just hang tight because I will get them next week when Nicole comes back. But for you guys that are here now, you can give me your questions and let me know who's here, who's watching, and where are you watching from, and where are you investing. Now, we just had a challenge last week, and gee, it seems like it was a while ago. But it was just last week. It finished up on Thursday. We did it Monday through Thursday. And it was a 4-day challenge. And we had a couple of guests on the first day. I had Brian from Tax Sale Resources talk about how to easily and quickly find data for tax sales, and also get results, get some analyses of past tax sales. Then on the last day of the challenge, we had Brenda Flatter from the name of her company skips my head just now. But she talked about how to get title insurance for your properties and how to do it quicker. She had a wealth of information on why you need title insurance and how to get it faster, different ways to get title insurance, and which states you need to get it in order to see, basically it comes down to this: you need title insurance to sell your property to someone who's getting a mortgage or financing. The financing company is not going to give them financing unless they have title insurance. And and here's another thing that I learned, and I learned something new every time I talk to Brenda. Title insurance is only good while you're on title. Like if you have, let's say you buy a property and you get title insurance on it, that title insurance is only good as long as your name is on the deed and you own the property. But if you sell that property to a member of your family, or you give it to a member of the family, and then they're on title, then that property insurance doesn't hold anymore. So you have to get a new not property insurance, I'm sorry, title insurance policy doesn't hold anymore. So you have to get a new title insurance policy. Okay. Rajesh, I hope I'm saying your name right. Welcome. And you're talking about assignment. When redemption happens on a tax lien certificate, who pays the income tax on the redemption? Okay, so here's what happens when you get a redemption. The person who gets the check, right, gets the money, they get a 1099 from whoever gave you the redemption. So, Rashesh, let me ask you this. What state are you talking about? Okay, so that I can be more specific, because as you guys know, tax lien investing is different in every state, right? Um, but I know that you're talking about states where you get a tax lien certificate, because some states don't even give you a tax lien certificate. Okay, New Jersey. And that's kind of what I thought in my head. All right, so let's say that I buy a tax lien and I assign it or sell it to you. Maybe I bought it last year and I want to get my money out right now, and so I sell it to you. So when we do that assignment, I'm going to make assignment a contract and have it signed and notarized. I am going to sign it in front of a notary. That's the agreement that I am going to sell my lien to you. And then I'm going to do an assignment. So I'll have an agreement that we'll both sign, by the way, and then an assignment contract, one-page document that lists the lien and what I'm selling it for, who the buyer is, who the seller is, and I'm going to have that assigned. The contract doesn't have to be, the agreement doesn't have to be notarized, but the assignment does. So I'm going to sign that assignment in front of a notary. Now, that assignment, the buyer, if I sell it to you and you're the buyer, you have to record that assignment and also let the tax collector know, give her a copy of the assignment and let her know that you are the new owner of this lien. Now, you will also get from the seller, so me, I'm the seller, I'm going to send you the certificate, okay? Once you pay me for that lien, I'm going to send you the certificate. But you don't have to record that certificate. It's already been recorded. You have to record the assignment. Now, when that lien redeems, okay, the tax collector is going to see that it was assigned to you and the redemption is going to go to you. Because you got the redemption, all right, you are going to get a 1099 with any interest that was made on that lien. Now, all of that interest might not have been yours, okay? Because no, the tax collector will not split the 1099. The 1099 is just going to go out to one person. But that is a really good observation, because here's the thing. All the tax collector knows is that she sold that certificate for a certain amount. That certificate was sold at a certain amount. The amount of the certificate, because remember, in New Jersey, you could pay premium, right? But when you when that lien gets assigned to somebody else, the what happens is, and you do that assignment contract, and it redeems. And I just have to think about this a minute, because the premium, when something get redeems, there's actually two checks that happen if there's premium paid, right? Because the municipality, the tax collector, the municipality keeps the premium amount, okay? And then there's the certificate amount, right? So there's two different amounts that were paid. The premium amount is given back upon redemption, okay? And then the face amount plus any interest that was paid. So there's two separate checks that are paid, okay? So you will get a 1099 for whatever interest there was, okay? And yes, premium will be paid too. So when you buy, so if I paid premium for my lien and I'm selling it to you and you're buying it, you're going to pay me the premium. Also, I'm going to ask for whatever I paid for it, okay, including the premium. And then everything will be paid to you upon redemption. Everything will be paid to you. And then you will get 1099 for any interest, okay? But you didn't make all the interest, right? I made some of that interest when you bought it from me. You didn't make all the interest. So that's something you need to talk to your CPA about how you do that. Now, here's how you do that. You have that contract, right, of what you agreed to pay. You have that contract. And then you have the assignment. All right, you have your agreement and you have the assignment. So when you go to your CPA with that redemption 1099 that says you earned X amount of interest, you can show him, hey, this is what I paid and this is how much interest they say I earned. And your CPA can figure that out for you, how much you really have to claim. But you can prove how much you paid for that investment and then how much interest they say you made. Okay, because here's the thing, your interest was made on what you paid, not on what, in other words, there was interest paid on the face amount of the lien, the certificate, okay? But some of that interest you paid when you bought the lien. So you will subtract that from the interest that you got when you declare how much interest you made. At least now I am not, let me qualify that with, I am not a CPA, okay? I don't know if that is legal, but that is something to talk to your CPA about. That is the way I think it would be done. Now, is there a capital gain portion and interest built in the docs? There's no capital gain. There's only interest income. There's no capital gain. Everything you paid for that, there's only capital gain if you actually get the property and then sell the property. At least that's what I'm thinking in my little head. I am not a tax accountant. I am not a CPA, and I am not a bookkeeper. So this is really a question for your CPA, but this is what I think would happen. All right. Now that, although I have purchased liens, I have purchased one lien. I have sold liens. I have sold liens that were in foreclosure. And before they went to foreclosure, I have sold liens to another investor. But I've only purchased one lien from another investor once. And I never did get a 1099, but that was not in New Jersey. That was in Illinois. So I don't know from the buyer's perspective what happens there. From the person that actually gets the lien, from the assignee, the one who gets the lien. All right, but that's something that you need to talk to your CPA about, okay? For the assignor, it's capital gain. For the assignee, it's all interest. No, for the assignor, it's also interest income. But he's not going to get a 1099 to show that it was interest income. So I'm not sure what he has to do or what he has to fill out to do that. I haven't, again, that is a question for a CPA. I do not know the answer to that question because here's the thing. Nobody really knows about your tax lien investments. Unless you're doing this through a business, then it would be business income if you're doing this through a business. But if you're doing this in your personal name and you don't get 1099, which you're not going to get if you assigned it to another investor, the government's not going to know. You know, there are places that I invest that do not in New Jersey. All the places in New Jersey are going to give you 1099s. They're all going to ask for your social security number. There are some places that I invest that they don't ask me for my social security number. They don't ask me for my tax ID. They don't 1099 you. Now, if you're doing it as a business, you have to declare it. But if you're doing it as an individual, do you need to declare it? That's kind of up to you. Because there's no, you know, nobody's going to let the IRS know. Yeah, and it's not long-term capital gain because you didn't, it's not a long-term capital gain. You just made interest on your money. Even if I'm selling you my lien, and typically it's not a lot of money, you know, that you would be, it's not, you know, a couple $100,000 usually, something like that. But when I'm selling a lien to somebody, maybe at the high end, it might be, it could be, you know, 10,000 or something like that. But normally it's a couple $1,000s because if I'm selling my lien to you and I want my redemption value, then normally it's a small amount if I'm only selling one lien, unless I'm selling a huge portfolio, right? That's different. And again, I know this is not a definitive answer. That's because taxes, income taxes, are not my expertise. My expertise is in tax lien certificates, and they are property tax lien certificates. So I am not an expert on income taxes. For that, you really need to talk to a CPA or an accountant. But I think it may have, I hope it's shed some light on the subject for you. It is capital gains when you actually get the property and then you sell the property, because you paid for an asset basically, and you sold an asset. And I know that sounds a lot like buying and selling a lien, but I think there's a difference there. And to really find out, you've got to talk to an accountant. And I would talk to an accountant who has a lot of expertise with real estate investors. All right, because a lot of accountants don't know very much about tax, property tax liens. They know a lot about income tax liens. They don't know about property tax liens. Okay, so so tell me, Rashish, do you have tax liens in New Jersey? Also, there is a trend developing in New Jersey where owners are not holding lien payments but paying current taxes. So lien finance is interest-free for owners for 2 years. Okay, there is a trend developing in New Jersey. Owners are not holding lien payments but paying current taxes. I don't really I think I know what you mean. Okay, so you have over 50 liens in your portfolio, and I think what you're saying is that are you? I'm not sure what you're saying about the trend that's going on in New Jersey. Are you talking about the owners of the property are paying the subsequent taxes, so the lien holders are not getting their not being able to pay the subsequents? Is that what you mean? Yes. Okay. Yeah. Typically builders will do that because builders know. So they will do that. But property owners generally don't know they can do that. but builders do. So you have to be careful. See, one of my favorite things to bid on are building lots, but you have to be careful because some builders know they can get an interest-free loan if they just let it go to the tax sale and then pay the subsequent taxes. The other time you're going to see this a lot is with water and sewer liens. With water and sewer liens, you don't always get to pay the subsequent taxes. So, and what I see, the trend I see happening is that investors are paying too much for these small water and sewer liens. If you have like, especially if it's under $200, if it's under $200, you're not even going to get a penalty, right? But even if it's like $500, you have investors that are paying $1,000, $1,200 to get a $500 sewer lien. They're only going to make 8% on the next $1,000 that they pay in subsequent sewer payments. And they're really not going to make any money. Are they going to lose money? No, they're not going to lose their money, but they're not going to make really anything. So it really doesn't pay to do that. But that's what I see. That's the trend that I see. Investors paying too much for those small liens that you don't get to pay subsequent taxes on. Yeah, so no 18% on the subsequent taxes when the owner just pays the subsequent taxes. So, okay. And I don't think that trend is just now developing. I think it's been going on. It's been going on. Yeah. Rashish, how long have you been investing? How long have you been investing in tax liens? Okay. Anybody else have questions? These are great questions. This year. And you already have 50 liens in your portfolio. That's great. You just started. Okay. I'm finding I've been doing this for 20 years and I'm always learning something new. Okay. So, so you'll find that. One thing I didn't know when I got started is when I got started with tax lien investing, I just thought that and I started in New Jersey, right? And I just thought that you made 18% on all your subsequents. I didn't realize that the owner has to be $1,500 delinquent first before you can make 18% on your subs. You only make 8% until the owner is $1,500 delinquent. So if you're buying a sewer lien for $500 and maybe that's all the water and sewer charges for 1 year, you've got to pay the subs for another 2 years before you get 18% on your subsequent tax payments. If you only get to pay the water and sewer fees and the taxes are escrowed with, a lot of times the taxes are escrowed. Okay, with the mortgage company. And for those of you that aren't in New Jersey, a lot of what I'm saying might sound complicated and foreign to you because New Jersey is a state that sells water and sewer liens along with tax liens. And you get a tax lien certificate for these water and sewer liens. And yes, after 2 years, you could foreclose. Even if you didn't pay the taxes, if you paid those water and sewer liens. Oh yeah, cannot buy online auction. A lot of money stuck for 3 to 4 weeks. Deposits held by towns. Only in person is successful. Yeah, and I agree with that. When you do, here's the thing about online investing, especially in New Jersey. Some states are not quite as bad as New Jersey because they do not require a $1,000 deposit. In New Jersey, they require a $1,000 deposit, but your deposit is 10% of your budget. So if you only put in $1,000, then you can only bid up to $10,000. Now that's nothing in New Jersey where premium is bid on liens. So really, to be successful in New Jersey, you've got to put down a $5,000 deposit and have a $50,000 budget. All right. Or at least a $2,500 deposit and have, that gives you $25,000 to spend at the sale. Okay. But here's the thing, you don't get that if you're not successful, and these can be very competitive and you might not be successful, then that $5,000 that you put in deposit, you don't get back for a couple of weeks. See, they'll take an ACH debit out of your account for that deposit, but they won't give it to you back by ACH. But here's the thing, you got to research, because some of these places will. You have to find the ones that do. But most of them will mail it back, and it will take a couple of weeks, and your money's sitting there. So so that's what Rashish is talking about. Okay, and I agree that you're better off in the live sales, but some of these live sales are very competitive also. So with the online sales, and here's the problem right now. Let me ask you this, Rashish. What month did you start investing? What month did you get started? Because it's very seasonal. And June is usually a very big month for New Jersey, but it's not as big as it used to be. February, okay, see, you missed it. The biggest month in New Jersey is December. You must invest in December, around the holidays, from November and December. When in November and December, you can find some success, especially at the end of the year, in those online sales. So save your money for then. All right, because that's when, and why? Because that's when some of the bigger investors are going to run out of money, and that's when there's going to be so many tax sales on the same day. And that's also the best time to go to the live sales. Now there's not a lot of sales going on. I mean, June is a pretty good month, right? But in the last couple of months, there has not been a lot of sales going on. And every one of them is competitive. So, you know, every place you go, there's little things that will make you more successful to look out for. And that's one of the things in New Jersey. Okay, anybody else have questions? And I love talking about New Jersey because that's my stomping grounds. Most of my investing is done in New Jersey, and now I don't invest for myself anymore. I invest for a fund, and the fund does invest in New Jersey too. They invest in New Jersey and Florida primarily, and other states also, but those are the ones that we do most. And here's what you do in the down times that don't have a lot of sales going on in New Jersey. The best thing to do is to pay your subsequent taxes and to look for to buy and sell liens. There's a good secondary market. There's not a lot available in the secondary market, but there are a lot of buyers if you have liens to sell. So, you know, if you got those liens at good rates, you could sell them to another buyer if you don't want to wait for them to redeem. All right. Or you might want to hold on to them for a year and pay the subsequent taxes and sell them then in another year if they don't redeem. All right, any other questions? Any other questions? All right. While I'm waiting for more questions, I want to let you guys know that I do have a coaching program. And I told you I just did a challenge. The first day of the challenge, we talked about how to find the best places to invest. And that is part of what you need to do in order to avoid the competition. Find the places that don't have as much competition, okay? Get the results. One of the things that I teach my clients to do is get the results of past tax sales so that you know whether it's worth it to go there or not, and you know how much money you need. Okay. Then there's a few things I look for when I go to tax sales to find the ones that are less competitive. And when I'm going to big county sales, I want to invest in the best places. So I talked about how to find the best places to invest. Okay, the second day we talked about, actually the first day I talked about getting the tax sale information easily and quickly, getting the tax sale information, finding out what tax sales are coming up all around the country, and then the best places to invest. All right, the second day we talked about, the second day we talked about finding the best places to invest. The third day we talked about choosing the right properties to bid on that are less competitive and that you can make a profit on. Okay. And then the fourth day we talked about what to do after you get a lien or deed to maximize your profit. Now, these are all things that I really help my clients with so that they get liens or profitable liens or deeds and they make money on their investments. All right, so if that's something that you're interested in, or you would like a clarity call with me to find out like how you can optimize your investing or how I can help you with it, but you want to make sure you have money to invest, because it doesn't do you any good to have a call with me if you don't have money to invest. All right, so I suggest that you have at least $5,000. The more, the better. You probably should have, if you're a serious investor, you're going to have at least 50,000 to invest. But even if you have 5,000, you could get started. If you would like to have a clarity call with me, you can, I'm going to put the link in here for you. It is, go to get, no, that's not the one I want to give you. Tax Lien Investing Mentor. Now this is a redirect because it's a long, it's a long URL that I can't remember. So this is a redirect that will go there. But there's a form that you could fill out that helps me know more about you to see if I can help you. And then you'll get a link to schedule a 30-minute call with me. Now, I don't have a lot of these calls available. Okay. And I only have room, if you want to work with me as your mentor, I only have room to add about 3 more clients this month. Okay, so if that's something that you're interested, you want to fill this out and set up a call with me as soon as possible. Okay. All right, any more questions? Any more questions? I will be doing another masterclass. I'm not sure when. We didn't schedule it yet because Nicole's on vacation. We'll probably get it scheduled next week, possibly next Wednesday or Thursday. Probably Thursday, because Wednesday night I do my coaching calls. I do a group coaching call, small group coaching call. That's the best way for people to learn, because you get to learn from the answers to other people's questions, and you might not have even thought to ask them yet, right? And we have people from different parts of the country that are doing different types of investing, and you get to see, what they're working on and answers to questions that you might not even have thought to ask yet. All right. So if there's no other questions, I want to thank you for joining me. Thank you for hopping on today and onto this Facebook Live. If this has been helpful for you, then let other people know about it. And give me a thumbs up, like, and thank you for somebody already did that. So thank you for that. And like our page if this is helpful to you, okay? Thank you very much for being here, and we'll be back again next week. Now, we also have a private group, Investing for Success, and you can join that group. You just have to answer some questions It's really just for tax lien. Oh, the link has a spelling error. Yeah, you're right. Thank you for letting me know. I'll put in, oh gosh, yeah. Thank you. Thank you, Rashish. We'll put in the right one. It's tax lien investing, spelled right, mentor.com. And you could just go to Tax Lien Investing Mentor, go to www.taxlieninvestingmentor.com. It will take you there. I have to put in the full URL, even though it's a redirect, but I have to put in the HTTP in order for you to be able, you should be able to click on that, and it will take you to the page where you can fill in the form and get a link to schedule a clarity call with me. And then we also have our Investing for Success group. It is a group if you go to facebook.com/groups, Investing for Success. I'll put that in here for you too. And this is not a redirect, so this is secure. It's facebook.com groups, Investing for Success. And you can join the Investing for Success group. You do have to answer some questions so that we make sure that you're interested in tax liens or tax deeds, and that's why you're there, and that you're not going to solicit the group. And we'll let you in. And that's where we had the challenge, by the way. It was inside the Investing for Success group. And we have some guides there. If you're new to tax lien investing, definitely join the group, because if you go into guides, there are some lessons there. I believe there's 3 of them. All right, I'll see you guys next week. At 2 p.m. Tuesdays, we do Ask the Tax Lien Lady Live. And then on Thursday in the group, I do a short training every week. So see you there. Bye.